Hi, hello everybody. I think it's 2:30 and it's time to start the webinar. My name is Kristjan Tamla. I am in charge of retail client business in EfTEN Capital, and I am the one who will take you through this webinar today. Although, to be honest, with this equipment, it feels more like driving the helicopter, but nevertheless, let's hope that we can pass this technical test also successfully, that you will hear me, and if you have questions, I can hear you, and you can also see slides. I divided today's webinar into two parts. In the first part, I'll introduce you to EfTEN Capital, what we are doing, how we are managing the funds. And in the second part, I'll go into more detail regarding our most recent retail client-oriented EfTEN United Property Fund, the fund which is currently launching an IPO. The IPO will finish on May 20, this Friday at 11 o'clock. And at the end of the May, we'll also list the fund on the Nasdaq stock exchange. And if you see any discrepancies in the presentation, or if you can't hear me, or if there are whatever tweaks during the presentation, please try to let me know, and either write somehow or make a scream or whatever, so that we can try to fix it as soon as possible. But let's then try to start. Let me see how I can change the slides. All right, so it works. First of all, EfTEN Capital. We are the largest real estate fund manager in the Baltics, and we are the only ones who have more than 1 billion euros of assets under management. And we are also the only real estate fund manager in the Baltics who has established teams in all three countries present. So we very much believe that if you want to do an active property management, you should have your boots on the ground. You really can't manage a property by sitting behind your computer screen and just clicking the mouse button. EfTEN was established in 2008 at the time of financial crisis globally, as well as in the Baltics. And as a result, a conservative approach, especially when it comes to leverage, is very much built into our DNA and is very much a big part of our investment philosophy. But despite this conservative approach, we have achieved really good results of all our funds. You can see that the performance on invested capital, or return on invested capital after all the fees, has been in between of almost 10 and almost 20% of all the funds. And maybe even more telling is that if we look at the institutional investors who are investing to us, then most of them are actually continuing to invest with us also in all the new products what we are launching. So they are happy with the ones where they are. If we are launching a new one, most of them are often joining us. Here is our fund range in a bit more detail. We are managing today 7 funds and also a private mandate. And altogether, as you can see, almost 1.1 billion euros of property assets under management. Our fund portfolios are very nicely diversified. It's diversified across the 3 countries. It's diversified across the subsectors of property market. And maybe one thing to note from this slide is that we are so far the only and also the first one in the Baltics who, in the real estate management business, who enter the elderly care sector. The elderly care sector in the real estate investment fund universe is increasingly popular in Western Europe, Northern Europe, but is in a really very starting stage in the Baltics. But we are the ones who have been starting to build it up and also see that this is the future where where part of our investments will be channeled as well. So how have we achieved those results? I think probably the most outstanding result for us was last year when Euromoney, the very well-known player in investment management industry, nominated us as the best real estate fund manager in the whole Central and Eastern Europe. And since we are managing the funds only in the Baltics, which is really a tiny part of Central and Eastern Europe, if you compare to Poland, Czech Republic, Hungary, Romania, Slovakia, etc., this was really quite an achievement for us. And we are the only fund manager in the Baltics who has been nominated and who has been winning this prize by Euromoney. How have we achieved it? We think that it's rooted in our investment philosophy, which has three main cornerstones. First of all, we very much believe that we are value-based investors. And what do I mean under this? I mean that when we purchase a property, then in addition of looking what is the current yield, the property yield or rental yield of this investment, we also very much analyze that. Do we think that how sustainable it is? Do we think that if the rental agreements with the tenants are finishing, can we extend them at least with the same terms or hopefully also better terms? The second thing what we very much look into is that what is the potential competition for such property? For example, we looked at if for some reason there appears a competitor who wants to build in the neighborhood a very similar property, then can he build it cheaper or is it more expensive? So as a result, we almost never ever want to pay for the property which you buy more than what is the replacement cost. And also, as I said already before, that we are fairly conservative on the leverage side. Even at the times where interest rates were negative during the past number of years, we always made our calculations when we purchased the properties with the assumption that interest rates are at least 3%, and we always amortize loans as well. So this is, I would say, the first cornerstone of our investment philosophy. The second cornerstone is that we always put our own skin into the game as well. And what I mean under this is that key people of EfTEN always invest our own personal money into all the funds as well, which means that we, together with investors, enjoy with our own money the good times, but also the bad times. And by having our own money invested in the funds, it gives us an extra kick to figure out potential solutions if the property for some reason doesn't work very well, or if there are any other problems. So we feel the pain with our own money equally as compared to other investors. The other part is that we want to keep our fee structure very simple and then also fairly thin, meaning that we never charge subscription fees. We never charge any transaction fees. For example, if we buy a property or if we sell a property, we never charge an extra fee on that. In all our funds, we have a management fee, which we charge only after the money has been invested in the real estate. If investors have trusted us money and it stays on the bank account, we don't charge a management fee. We charge it only after we put it into work. And when it comes to success fee, which some of our funds have, we charge the success fee only after we have returned all the capital to investors, plus the performance, what we have agreed. And if there is then any money left, then the performance fee is only charged upon that. And the third cornerstone of our investment philosophy is the active management. We very much think that every property needs a full control. We never purchase a property by becoming a minor shareholder. we want to have a full control of all the properties. So it gives us a freedom when there is a need, for example, to reprofile. If the property really doesn't work, we can reprofile the tenant mix, we can reprofile the usage of the property, etc. So our sort of investment philosophy based on 3 pillars, value-based investing, our own skin in the game, plus simple fee structure and active management has really yielded those successful results, what I just described you through. And since EfTEN was established at the time of the crisis, 2008, the same investment philosophy has worked equally good during the crisis years, 2008, 2009, but also during the more favorable times during the past few years. And then since it has really carried us through the full business cycle, so to say, we very much believe that by following the same investment approach going forward will also take us equally successfully through the next business cycles as well. So this was the first part of the presentation. If there are questions, you can definitely ask them later. And if you don't want to ask them during the webinar, feel free to share your questions by the email, which I will share later after the presentation. But now let me please turn to the second part of our presentation, where I will in more detail go through the EfTEN United Property Fund, our latest retail client-oriented product. And let me start with a brief history. There are 2 main reasons why the fund has been launched and why we are today in the IPO phase, and then why we are at the end of this month listing the fund in the Nasdaq stock exchange. And the 2 main reasons are that when roughly 1.5 years ago in EfTEN, we started to analyze that how does the investment universe into the Baltic real estate look for retail clients in the Baltics. Then we recognized that a number of crowdfunding opportunities has increased during the past few years. There are also a few certain real estate sector or segment oriented property funds available, but there isn't really a broad-based property fund or real estate fund which invests through the whole universe of Baltic real estate market, meaning that if there is a client who wants to have only one investment in the Baltic real estate market, then there isn't really a product which what we call is, so to say, an index-like portfolio of the Baltic real estate, which invests equally to the commercial cash flow generating real estate, which invests also to residential development, which invests to rental apartments, etc., etc. So by recognizing that there is a gap, we thought that maybe that's the gap what we should fill in. And the second reason behind launching the EfTEN United Property Fund is that if you look a bit back, or I can actually go here. If you look at our fund range, then EfTEN created new funds after every few years, but most of them, and these are marked in gray here with a gray color on the screen, most of them were oriented towards institutional clients. Only the white ones are for retail clients, and more retail clients started to turn us and ask that why can't they invest to our funds which are meant for institutional clients only. And as a result, by combining those 2 things, that trying to give access to retail clients, also to our institutional fund range, and then by trying to create a product which invests across the whole universe of Baltic real estate market, we decided to launch a new fund, which we call EfTEN United Property Fund. We opened it for new investments in Estonia in June last year. Now we are in the IPO phase, which will finish May 20 at 11 o'clock. And after this, the product will be listed on Nasdaq Stock Exchange, where also investors from Latvia and Lithuania can equally invest in. And this is actually very important to us because EfTEN is a pan-Baltic company, and we really treat all the free markets equally. And by having access to potential investors in all three countries is very, very important to us. A few important things to remember about the fund is that when it comes to distributions, then since it is a retail client-oriented fund, our aim is to have frequent profit distributions from the fund, and we are targeting that soon we can hopefully have distributions up to 4 times a year, so to say quarterly distributions, which is very much in line with main property funds in Western Europe or also in the United States, which are making frequent distributions. The second thing maybe to look at is the fee structure. And as it is a retail client-oriented fund, we decided that it should have a very, very simple fee structure. And we came up with the idea that the fund has only one fee. It's the management fee on direct property investments. So if the money is not being invested or is uninvested, we don't charge any fee. If we invest from EfTEN United Property Fund to the EfTEN funds, which are intended to institutional clients only, we charge a 0 fee from EfTEN United Property Fund in order not to have this double fee layer. And the fund doesn't have a success fee because we consider that for retail clients, more simplicity is always better. And the fund has now been operational since late June last year. By today, a bit more than 5,300 clients have invested to the fund, and they have invested almost 20 million euros, a bit less, 19.3 million. With those 9 months, we have managed to create really a very diversified portfolio. The fund has now altogether 27 underlying investments, 27 underlying properties, diversified across 3 countries, Estonia, Latvia, Lithuania, a bit more in Lithuania, and currently the least in Latvia. But the reason is that currently just the Lithuanian property market has been the most interesting and the one where we have found the most interesting deals for our clients. Roughly 55% of the fund is invested through EfTEN funds. Roughly 35% is invested directly to direct property, and currently only 10% is uninvested. So considering that it really takes time to build up property portfolio, we are extremely satisfied that with roughly 9 months, we have managed to invest about 90% of the capital what investors have trusted to us, and we have really managed to create a very diversified portfolio with 27 underlying properties. It is by far the most diversified real estate investment fund available in the Baltics. Now, looking a bit ahead and looking a bit to the future, at least currently, we see that the rental apartments is one of the most interesting areas where we want to expand the fund. In the current IPO, we are raising up to 5 million euros. And from this 5 million euros, already 1.3 million, we are planning to dedicate to rental apartments. We see that there is a really, really big demand for institutionalized rental apartment segment, together with the increase of property prices, where more and more people are not available to buy, and as a result are moving to longer term lease rental agreements. And the second reason, of course, is that there is now an increasing demand also due to influx of war refugees from Ukraine. As an example, from Tallinn rental apartment market, and what's the balance of supply and demand, I can give you one example. Is that if one compares the number of rental apartments being offered in the biggest real estate portals, whether it's City24 or kv.ee, then during the past 2 months, the number of offered rental apartments has decreased by half, meaning that the demand by far outpaces currently the supply. And we see it also in our business. We have one rental apartment development finished in Tallinn. We finished it December last year, January this year. It has altogether 112 apartments. It's by today fully rented out. Basically, when the apartments came to the market the next week, there was already a tenant. If there have been also now some tenants have left, for example, people moving together, young people creating a couple, one decides to give up an apartment. With people moving out and then getting the new ones in, the demand is I would say even increasing. It takes sometimes even less than a week to fill the empty apartment. And what we can see is that always the rental price, what we are asking now from the new tenants and new agreements, is quite a bit higher what we asked in December, January. So the sort of the pressure for rental prices to increase is really big. Maybe also a few words about our residential development project. It is the Uus-Järveküla residential development. This is based on the outskirts of Tallinn. It's a very fast growing area. We are developing there together with Invego, one of the biggest property developers in Estonia. We are developing there altogether 165 detached houses. And so far, during the past 8 months, we have put on the market 52 of detached houses we have put on sale. And then so far, 45 of them have already been purchased. So the demand for this project is really big. And then this is so far the biggest single only detached house-based project. We are planning to start the construction of the houses later this summer, and in the current plans is that the first residents will move into this development from around mid next year. So this is about the existing property or existing portfolio of the EfTEN United Property Fund. As you see, very well balanced across countries, across different segments, across different investments. Looking at the past performance of this portfolio, the 9-month performance is 6.1%. And if one annualizes it, it's over 8% return, taking into account that building up a property portfolio really takes time. And especially the first months are generally the times when it's hard to create superior performance. We are actually very satisfied that already sort of during the first year, we have managed to create more than 8% annualized return. The team who is behind the fund who has built up the portfolio and who has created our investors the return I talked about. It's four investment managers, 2 founders of EfTEN Capital, Mr. Viljar Arakas and Mr. Tõnu Uustalu, and our country managers in Latvia and Lithuania, Viktor Savins and Mr. Laurinas Šilis. All of them have worked in EfTEN Capital already for years, and all of them have extensive real estate market investment experience also from the years before EfTEN. So if one sums together the investment experience what those 4 guys have, it's more than 80 years now. And those same 4 guys, they are actually managing all the EfTEN funds. So if a person decides to invest in the retail client-oriented EfTEN United Property Fund, the person actually gets the fund which is managed by the same 4 guys who manage also the funds oriented towards our institutional clients. And me in the middle, I am then responsible for daily operations of the fund, doing the conference calls or I don't know, what is it, driving a helicopter, if one makes a joke, preparing the investment reports, and etc. And since the team has worked together in hard times as well as in good times, there is really a very good chemistry between those four people in the fund. And to finish off the presentation, there have been people who have asked that there will now be 2 EfTEN funds listed on the stock exchange, EfTEN United Property Fund and EfTEN Real Estate Fund 3, which was listed 5 years ago. That what are the main differences and how investor should distinguish and differentiate between those 2 funds. And I'd like to emphasize maybe 3 aspects. Aspect number 1 is investment mandate. EfTEN Real Estate Fund 3 invests only to commercial cash flow generating real estate. EfTEN United Property Fund, on the other hand, invests in addition to commercial cash flow generating real estate, also to residential development, which I touched upon briefly before, and also to rental apartments, which I touched upon briefly before. And we have discussed that potentially going forward, somewhere in the future, one investment area where EfTEN United Property Fund can also expand is the, so to say, infrastructure related real estate, where big infrastructure managers, whether they are those data parks, big IT data warehouses, where they are renting for really long term real estate, etc. That potentially, if we see good investment opportunities in this area, that could be an additional investment focus for EfTEN United Property Fund. So to sort of conclude, the investment focus for EfTEN United Property Fund is the whole Baltic real estate market, whereas the EfTEN Real Estate Fund 3 focuses only on commercial cash flow generating real estate market. Point number 2, or difference number 2, I would like to point out is related to profit distribution plus taxation related to that. EfTEN Real Estate Fund 3 distributes dividends once a year. In EfTEN United Property Fund, we have an ambition that the profit distributions will be up to 4 times a year. And if an investor is an Estonian resident, then since EfTEN United Property Fund is a contractual investment fund, then a person can actually defer the tax on distributions if a person invests through the investment account or the pension investment account, so to say PIK or PIK in Estonian language. And the third difference I would mention is the fee structure. EfTEN United Property Fund has only one fee. It's the management fee of 1.5%, whereas EfTEN Real Estate Fund 3 has in addition also a performance fee, which is on a return exceeding 10% per annum. And with this slide, I'm finishing. I thank you all for listening this webinar. That was first time to do it for myself. I hope that everything was clear, and I hope that that's not the last time when we meet in such a form, and then I hope that we can meet also going forward. So thank you. If you have questions, I don't know how the system works, I'm more than happy to take them. If there are no questions, or if you don't want to ask them, you can easily send them to the email address united@eften.ee, which you can see on the screen, and we'll try to answer them as soon as possible. So thank you.